Don Singletary, and today I'm going to tell you that half the people, maybe more, they try to learn to day trade micro E-minis or any stock equity index futures on any level will blow up their accounts and fail. Now, their gurus on the television, YouTube, articles, magazines, everywhere telling you, or at least trying to make the impression on you, that once you find the magic formula, which they happen to have, and they're willing to sell it to you for a few $1,000s, that you're going to be on easy street the rest of your life. Now, you know that's absolutely bullshit, right? I have great sympathy for beginners learning how to day trade the micro E-minis or day trading anything. First of all, it's a very high risk environment. You're not going to get a win rate of 95% in your trades. You're going to lose about 40%, and if you're good, you're going to make money on about 60%. And what you have to do is make it rule number one to learn how not to lose your money. And unfortunately, it's not what happens. Beginners get there, and I understand this. There's so much misinformation out there. Beginners get going, they fund their account, they watch a few videos, somebody makes it look really, really easy, and then they get in there and start trading. And they have the mistaken impression that people are trading 5, 10, 15, 20 times a day. And so what if I lose 40%? As long as I'm making money, I'm fine. Well, something happens, and I got an email the other day from a fellow, and he makes a very, very good point. And it prompted me to make this part of the video just because he sent it. He said, I think it's important that you mention, especially to beginners, that trading these E-minis is not cheap. Commissions and fees add up very, very quickly. Well, sure they do. If you jump in and you start trading 10 or 15 times a day at $3 a pop, that's $30 to $50 a day, $100, $150 a week you're losing. And you don't even know how to trade. You don't have any experience yet. What you need to do is back off. This guy was trying really hard, so I got on the phone with him and talked to him. And when I asked him a couple of questions, I said, how often are you trading? He says, only anywhere from 10 to 20 times a day. Why? Is that too much? I said, yeah, it really is. I mean, think about it. You trade $3 round trip at 20 times a day. That's $60, at least $40 to $60 a day in just fees. And you got to make $200 a week just to break even. And then what happens when beginners do that, they feel even more pressure because they're losing, and they make bad decisions. Like they start taking trades with a higher risk, or are moving the stops back and say, maybe I'm not risking enough. Maybe that's why I'm not making money. And then they lose even more. And this is a vicious, pejorative circle pit really that beginners fall into, and that's why so many of them blow up their accounts. And my advice to you is learn trade selection. Trade selection is going to be the key to your success. It doesn't have much to do with how many times a day you trade, as long as you're not overtrading. I mean, if you overtrade, you're just paying broker fees all the time, and you're going to keep doing the same thing over and over again and still lose money. And Einstein said, doing the same thing over and over again, expecting different results, that's insanity. And it certainly is. Not only insanity, but it's very, very expensive. So do yourself a favor. Think in terms of starting off with maybe 1 or 2 trades a day and risking 1 or 2% of your account. Do something reasonable. Go slow in the beginning and feel your way around. And watch all the material. Watch the live trades here on the channel and learn how to use stops. After all, you're a beginner. You're learning terms. You don't have a lot of confidence yet. You certainly don't have any experience yet. So the worst thing you can do is go in there like a bull in a china shop and trade 20 times a day. You're just going to blow up your account. And I tell you this because that would make me very sad, but it would hurt you a lot more than me. And I want you to avoid that mistake. It is the most common mistake, the number one culprit. And I understand fully why beginners think that is how you should begin trading. And it really isn't. Not if you want to make money and if you want to last. If I'm looking for a simple way to say it, where it's really becomes obvious, I would say trading is 2 parts. Half of that is trade selection. If you don't learn good trade selection, you'll never make any money. And the second part is learning to lose, being able to accept the fact that you're going to lose 40% of your trades. Now, that's totally counterintuitive. Nobody likes to lose at all, anytime, ever. Well, it's counterintuitive. In this kind of trading, you're going to lose about 40% of your trades. Why is that? Why can't you get that win rate up to 70, 80, 90, 95%? After all, you're going to gain more experience and get better at it as you go along. Well, sorry. The truth is, it's just a mathematical fact. You're in a high-risk category of trading, and this requires you to do something that buying and holding stocks long-term and that kind of trading never teaches you, and that's how to lose properly. Because you can get a high win rate with some types of trading. This just isn't one of them. And I think more people training beginners to learn to trade should emphasize this more. So suppose, well, trading is like you own your own company. And if you had an employee that was stealing from you or costing you money every day, you wouldn't keep them around very long. Well, that employee's name is overtrading and impatience, poor trade selection. So you got to select good trades and be willing to accept the fact you're going to lose 40% of them and fire them. Get rid of those bad trades. Don't even wait till it hits your $20 or $30 stop. If you're into it for a few minutes, it's not showing you anything, fire it. Get rid of it. Vamoose, get out of here. Go find more fertile ground in which to trade. Get better and better at trade selection and better at keeping those losses down to something realistic. And that's how you make it. I hope there's a tiki bar coming to your place soon. Okay, let's have some fun, make some money. Featured trade of the week is going to be a Russell 2000 trading at $5 a point. Look for the link below the video on how to use these bracket orders in the Tastyworks software. Entry, stop, and target price all at one time. March 1st, 2022 here. And we can see the market opens at 9:30 and immediately I'm always talking about momentum, the surfer who waits for the right wave, and you just have to hop on for a short ride. See that MACD signal down there, a sell signal? I did trade earlier in the day, but let's pretend this is the only one for right now. 11:31 a.m., I put in my bracket order, and I short one Russell 2000 at 2015.8. See my stop up there at 2020, and that means we've got 4.2 points, so we're risking a total of $21 initially in this trade, and that's because we have that stop up there at 2020. 1 minute into the trade now, the target down there at 1990. Doesn't matter what you put in there. That's like a Christmas list. You may or may not get it. But it's handy to have it down there. You can move it up and trigger something if you need to. You remember that surfer you saw a moment ago. Now, surfers don't invent the waves. They don't imagine the wave's going to come by. They wait till one comes by and get on it. Now, that's a trading tip in disguise. And I hope you'll take it to heart, because your brain will trick you. It'll tell you, the next time the market's about to turn around. Don't look for turnarounds. Save your money and wait for the opportunity. Go with the flow. The trend is your friend and all that. Another nice thing really happens when you choose the right wave or the right trade here. Notice on this trade, there's been almost no drawdown at all. I've got my stop up there, $21 away from the entry point. But look what happened. I got on a trend that already existed, not one that my brain thought I saw. And I'm down at 2011 now, so I'm $20 up in the trade and barely 2 minutes in and no drawdown. Now, anytime you can do all that, have no drawdown, start making money immediately on a trade, it means your trade selection is getting better and better the more often that happens. Now, that doesn't take the risk out of a trade. These things can turn around and bite you really quickly, and you have to be ready for that too at all times. You know, it's like an action movie. When a hero goes down and sits in a bar, you know there's going to be a fight. Well, the first thing a good hero does is know where all the exits are, you know, and you have to be ready to pull the trigger to get out of a trade as well as you do to get into a trade. Now, no matter what you've heard, this trading stuff is not rocket science. You don't have to be a math whiz or a genius. Mostly it's common sense and self-control and learning how to find the right opportunities. And that's your job, to learn to trade. Now, once you put in the time and you don't learn how to make a lot of money regularly in a couple of weeks, you have to kind of learn it to earn it as you go. And this trade's kind of stalled out now at 2011. I wouldn't think the trade is going nowhere because of that. It's just that during a trade, you watch these things. You know, it ran down pretty quickly there when we first got in. Now it's slowing down just a little bit. It doesn't mean it's going to stop. It could turn around and go back up and take all your profits away too, which is why I'm going to move that stop up there at 2020. I'm going to move it down very, very soon here. I'm already $25 ahead on the trade right now. So start thinking right now. If you were doing this trade, where are you going to pull that stop down to? It depends on the volatility. Now, one of the reasons I picked the Russell 2000 on this particular day, and I did not show this on the screen, was because it was less volatile than the others. All four of the Micro E-minis charts were trending down at the time that I made this trade. As you gain experience, you can look at the height of the candlesticks, and it tells you what the volatility is. You can see how much it changes every 5 minutes or so. Well, these candlesticks on the Russell 2K were shorter than the ones on the other Micro E-minis, which means it's less volatile. It moves a little bit slower, and a little, slow and steady sometimes is the way to go. It's not trying to make the fast buck all the time. And that's a great thing to remember. In trading, you have to keep your expectations realistic all the time. Trading 2009 now there I am again now. And so that would be like 6 points down and $30 up in the trade. So where are you going to put your stop? It's time to move it down, right? Well, actually, no. This trade just stalled at 2010 for the next 7 or 8 minutes, and I finally got to, at 11 minutes into the trade, get my Tastyworks mouse out, that click and drag feature that I love so much. Just hold the left mouse button down and drag the stop price down. And I let it go right there at 2014 and a half. But see what happened. I got a free trade now. Why is that? Because I entered a short at 2015.80 and now at 2014.50, 1.3 points down. It's a little over $5. That's the worst thing can happen to me on the trade now. So I'm going to make about $5 on the trade. And that's not such a bad thing. And my price is moving down. See that? I'm down to 2008 now. Well, the 2008 area, I'll just call it that, 2009.2 at the moment. $6.50 locked in with the stop there. Look at those highlighted 2 candlesticks there, 5 minutes wide each. For 10 minutes, the price on this trade did absolutely nothing. It just sat there, which is why I fast forwarded through this, because sitting there watching for 10 minutes was like watching paint dry, and I didn't want to do that to you. What may be more important here is watch what happens now. The price there, that 2010 over there, is coming up to 2011 and a half right there. Now, it's important that you notice now what I'm not doing. I am not moving my stop back up because the price is stalled for 10 minutes. It could be turning around, but I'm going to stand my ground. Now, that's important because you start moving stops when you've been in a trade this long for this and gotten nothing for it. You don't want to leave with a loss. That would be that would be a lot of wasted time. So at least I'm going to make my commissions and enough to buy a cheeseburger back, a small cheeseburger. 2012 and a half now, and I still have not moved that stop out of the way. I'm not going to do it. I'm perfectly content if this trade stops me out here. It's either going to make me money or it's going to stop out at 2014.50. There's no in between. Those are the only two things that can happen. You see, by making up my mind, I've limited the possibilities on this trade. If I start moving the stop back, will I do it again? Will I go down? You start second guessing yourself. And it's like a dog chasing his tail. He just goes nowhere. So I just limit the trade to two outcomes now. I'm going to wait and see what happens. I'm trying to teach you to play this game here. You see what happened? I made a decision, and it limited the outcomes to two possibilities. One of them is I make $6.50, and the other is that I make more. That's it. And when you make a decision, you have to stick with it. This type of trading, you have to learn to make decisions before you have all the facts. But there's a lot of power in being able to make decisions, and you have to accept the responsibility is that you could have made the wrong decision. And that's part of the game. If you can't accept that, go find something else to trade, because that's what you have to do all the time in this type of trading. Can you imagine that an absolute perfectionist trying to trade like this will drive him nuts, or her? And I'm an equal opportunity guy here. I'm taking my Tastyworks mouse now. The price hit 2007 there for a moment. I'm moving it down now to 2012.8. Well, that means I've got a $15 profit locked in with my stop, 3 points. And my unrealized gain right now is between $35 and $40, about $36 at the moment. And what you're seeing on your screen right now is that we can control with a click of that mouse, as you'll see coming up right now. You can control the stop and everything right from a live trade screen. And if you're learning how to trade, this is a great benefit, and you may not realize that with other software, very often you're looking at 2 or 3 screens at a time, or worse yet, you're having to change back and forth between screens. There you go, move my stop down to 2009.30 with my magic Tastyworks mouse. 6.5 points locked in now, $32.50. As a beginner, you may not know, but not every software puts everything on one page like this. I can take my mouse, move that stop up and down. I see the live quotes and prices and everything all on one screen. See it, click it, trade it is what they call it. And that's exactly why I selected Tastyworks to use on my channel here. Now you can see you always make better decisions when you're making money in a trade. It's when you get behind is when you start messing it up. Took my Tastyworks mouse, 2006.60 is my new stop. I'm trading at 2004 right now with a $59 unrealized gain. Now you know, no matter what happens, worst thing is I make $46 now. And you always, did I put the stop in the best place? I won't know till the trade's over, of course. And it looks like I'm going to get stopped out here. There I go. Stopped out now with a $46 gain in about 15 minutes. Click subscribe and hit the bell. You'll be notified of the new trades each week by text or email. They're a lot of fun, and if you miss them, you'll be sorry. We do try to enjoy trading here on the channel. Trading is a lot of fun if you're making money. And that's what we want to try to help you learn. Join our over 12,000 subscribers and more than 100 free videos on the channel to help you learn how to do this thing. Slight adjustment. In the end, it was 16 minutes and $45 for the profit. So it was a good trade, you know, $45 in about 16 minutes, not shabby. But what I want to do is kind of do a little epilogue on the trade. Now, you notice the trade was 16 minutes long. And during that 16 minutes, before the trade actually started, I made 7 or 8 decisions to be able to get into the trade. I had to find get my surfboard out and find a wave to get on, so to speak, as we explained. And during the trade, I had to move the stop about 5 times, and every time I had to decide when to move it, then where to move it to. And you see what I'm saying? Cumulatively, during that 16 minutes, I probably made somewhere between 25 and 35 decisions. Now, imagine the chances of 10 different people doing the exact same trade, making 30 decisions, and they're all being identical. They're not. Each of us trades differently, and you can give the same instructions to 10 traders, and they'll come back with 10 different results on the same trade. And that's the nature of this trading. And it's just absolutely crazy to think a technical indicator is going to get you through every one of those 30 decisions during a trade. Now, it's really hard for beginners because if you jump in, and our theme in this whole video has been about overtrading. So if you jump in and you start overtrading and you don't have any experience at making these decisions, you can see if you're trading 10, 20 times a day, you're just throwing money away. Start slow. Take your time, learn to have discipline, make your number one priority not making money, but avoiding the risk. That's the traders that last, the ones that avoid the risk. But just to jump in there, trade 20 times a day because of the fear of missing out is financial suicide. Just don't do it. I've got some more help for you. I have my book. It's listed on Amazon. It's called Day Trading the Micro Futures, and it sold thousands of copies and over 300 5-star reviews on the book. It only cost about as much as a large 3-topping pizza, not very much, and I would hope that you'd be able to get enough out of the book to save many, many times the cost of the book over and over again. Can't guarantee that, of course, but that's my hope for you. So be sure and check out the book link in the text below the video, and get at your hands on a copy of the book. I really think that it makes learning this stuff easier and faster because it shows you which terms and which things are most important in the book. Plus, as you know, I'm big on trade psychology, and I've got some special entries into the book there in a chapter on trading psychology. So check out the book link below. And really important, you can help me out here. Hit the like button if you want to see another video like the one you saw today. That helps me keep track of the things that the viewers on the channel, almost 12,000 now, want to see in the next week's video. And hit that subscribe button so you'll be notified. I had a lot of fun today, and I hope you were able to take away a few gems you can use to save yourself some money. I'm Don Singletary, and I hope every day is a payday for you. And thank you.